Welcome back, grade 10s. Let us look at our first concept of the lesson, which is state-owned company. The meaning of state-owned company. In a state-owned company, the government is a major shareholder and it falls under the Department of Public Enterprise. So the term, you can hear it, it says state-owned company. We call this a state-owned company because here the government is the majority shareholder. And these enterprises, they fall under the Department of Public Enterprise. SOC, which is state-owned company, take on the role of commercial enterprise on behalf of the government. So with state-owned company, we are referring to those businesses that are rendering products on behalf of the government. Not to say the government is the one who's doing that, but there are enterprises who are run whereby the government is the majority shareholder and they are selling products to the public on behalf of the government. Now let's look at the examples of state-owned companies that we have. We have here in examples of state-owned companies in South Africa, it includes Armscor, Alexco, SAA, Eskom, as well as Transnet. Remember, grade 10s, these are just some of the examples, not to say we have exhausted them all in this list that you're seeing. There are others. Now, let's look at the characteristics of a state-owned company. The state-owned company is financed by the government. Why it is financed by the government? It's because the government is the majority shareholder in this company. The name ends with letters SOC. So the name of the state-owned company ends with SOC. So whatever company that you see a name of it and then there's SOC at the end, then automatically you must know that that is a state-owned company, meaning the government is the majority shareholder in that particular company. The state-owned company is listed as a public company. So state-owned companies are listed as public companies. These enterprises are managed by government and not by individuals. Since the government is the majority shareholder, so he is the one who manages these enterprises and not individuals because they don't belong to individuals. Let's look at the advantages of state-owned company. Prices are kept reasonable or create sound competition with the private sector to make services affordable to more citizens. So an advantage of a state-owned company is that the prices of state-owned companies, they are kept reasonable. Why? Because they do not want that private companies should exploit people and make prices to become high and prices not being affordable to citizens. But with state-owned companies, they are able to create a healthy competition between the state-owned company as well as the private companies. Profits may be used to finance other state departments. So obviously the profits that are being made by these state-owned enterprises, they are not only for the government to use it, but the government takes those particular profits and finance other state departments in order for those state departments to continue operating. Shareholders have limited liabilities. We said the state-owned companies, they fall under public companies, meaning they are also shareholders. You can be a shareholder in a state-owned company, but the majority shareholder, you need to know that it is the government because he is the one who owns these enterprises. So obviously the shareholders have limited liability, meaning the debts of the state-owned company do not belong to the shareholders. Now, let's look at the disadvantages of the state-owned company. Often rely on government subsidies, which may not cover all companies' expenses, since it's the government who finances the state-owned companies. So sometimes you may find that it's not always enough, the money that the government is giving to these state-owned companies. So that's why you would find that they cannot keep up with the expenses of the company. It does not cover all the expenses because they rely on the government's finance. Losses must be covered by taxpayers. So whatever losses that are being suffered by the state-owned companies, who are going to pay for those losses? Unfortunately, it is the taxpayers who are going to pay or cover for those losses. State-owned company is compelled to have its financial statements audited, just like the public company. Like we've said that this company, which is a state-owned company, it falls under the public company. It is compelled by law to audit the financial statements because there has to be accountability in terms of the money is coming in the business and the money is also going outside the business. Now let's move on to our second concept of the lesson, which is non-profit company. The meaning of non-profit company: a non-profit company is a legal entity organized and operated for a collective, public, or social benefit. So a non-profit company, not that because the company is not making a profit, so it's not registered. It is registered, but registered for charity reasons, registered for benefiting the society, benefiting the public. They include churches, charity organizations and cultural organizations. The primary objective of an NPC, non-profit company, is to benefit the public, not to make profit. Like we've alluded before, we said that the non-profit company, the main aim of this company is to benefit the society and not merely to make a profit. It's not operated for financial gain. Now, let's look at the characteristics of NPC. The main aim is to provide a service and not to make a profit. The name of the company must end with NPC. So the name of a non-profit company should end with NPC. So you see an enterprise, then it ends with NPC, then automatically you would have to know, learners, that this is a non-profit company. It's incorporated not for financial gain, but for the public benefit. Surplus funds must be used for the primary objective of the NPC. So obviously, if there's extra money in the business after we have, not in a business, in a non-profit company actually, after we have maybe spent on our expenses and then there's money left, that particular money that is left that we call our surplus funds, it has to be used solely for what? For the primary objective of which is to benefit the society. That money cannot be shared amongst the people who work in a non-profit organization or for any other reason. It has to be only used for the benefit of the public. Now let's look at the advantages of non-profit company. Surplus funds are used solely for the primary objective of the organization, which is to benefit the society. The company does not pay tax, so all earnings can be recycled back into the organization to improve it. So here's an advantage of a non-profit company, which is the non-profit company is not taxed. So that money can be used again to do what? To assist the non-profit company to be sustainable, to make sure that it continue to assist the community with whatever primary objective of which is to make sure that the society benefits from this non-profit organization. Can receive grants or aid from the government. Another advantage of a non-profit company is that the government can give these organizations grants, or the government can also offer help to non-profit companies. The disadvantages of non-profit companies is that it needs professional assistance to set up this organization, meaning you cannot just start it as you would start your sole trader or as you would start your partnership. It needs professional assistance in order for you to start this company from scratch. Another disadvantage is that it does not generate enough capital to cover their expenses. Since they are not selling a product, they are rendering a service of which it's free of charge. So it can be difficult to generate enough capital. And because they rely on government grants and they rely on donors to give them support in order to continue running for the cause of the organization. So it becomes difficult to cover some of the expenses. Donations may not always be enough to finance the company's expenses. It can happen that the non-profit company receives less donations. So with those donations, they won't even be able to cover the expenses that they have. So it's a disadvantage on their side. Obtaining grants can be slow and tiring process. So in order for the non-profit company to obtain grants, it can be a tiring process because they have to apply, and after applying they have to wait in order to get a feedback from the people whereby they've applied for grants too. So it's a tiring process if they keep on applying and yet there's no response from their applications. Let us just go for a quick ad break and we will be back.